Welcome back to my channel Iraqi Dinar RV Global Shock, as Vietnamese dong revaluation surprises the world. May 2025. Imagine checking your account one morning to find that the currency you've quietly collected over the years has drastically appreciated in value, practically overnight. That's the surreal reality for holders of the Vietnamese dong, VND, in May 2025. Long pegged at around 23,500 VN to 1 USD, the currency underwent a dramatic revaluation to just 1,200 VND per dollar, sending tremors across global financial markets. This shift came without warning, press briefings, or leaks, making its sudden arrival feel like a bolt from the blue. At exactly 24:33 GMT, banking systems across the globe began reflecting this new rate. Forex terminals, mobile banking apps, and institutional dashboards from names like HSBC, Citi, and Standard Chartered all updated their figures in unison. Screenshots flooded social media as stunned investors shared what looked like an overnight transformation of their wealth. This wasn't a system error or market fluke. It was a planned and tightly executed monetary recalibration that caught nearly everyone off guard. Instant market disruption. The global reaction was immediate and intense. Foreign exchange platforms froze VND trades due to extreme volatility. Central banks throughout Asia convened emergency meetings. Retail investors scrambled to understand what was happening, while institutional players moved quickly to assess the potential windfall or fallout. To give perspective, a $500 investment in VND at the previous rate would yield approximately 11.75 million dong. After the revaluation, that same amount is now worth just under $9,800, representing a staggering gain of nearly 1,900%. It was a moment of shock, disbelief, and sudden wealth realization for many. A calculated, silent operation. What made this event so unique was its stealth. There were no advance signals, no hints in public policy, and no speculative media leaks. However, evidence now suggests that preparations were made behind closed doors. Some banking institutions had quietly updated their foreign exchange modules earlier this year. Chase and Wells Fargo, for instance, had reportedly restructured their internal forex architecture to include reference tiers for emerging exotic currencies. Insiders believe these silent updates were clues to an anticipated revaluation. There's growing consensus that non-disclosure agreements were in place for select financial professionals to ensure no market speculation or early buy-ins could disrupt the plan. IMF's cryptic response. Shortly after the new rate appeared across systems, the International Monetary Fund, IMF, issued a vague statement referencing regional currency realignments based on evolving macroeconomic indicators. While Vietnam was not mentioned directly, the timing was too coincidental to ignore. Experts believe this veiled acknowledgement signals the IMF's behind-the-scenes approval or even involvement in orchestrating the change. In Vietnam, several official websites went offline just minutes after the event began unfolding. Pages showing older exchange rates were either taken down or replaced with maintenance notices. A bulletin believed to trigger the revaluation was pulled within 20 minutes of being published, adding more evidence that this rollout was a highly coordinated operation, shared only among a trusted few. Why now? Why the dong? For years, economists have argued that the Vietnamese dong was undervalued when measured against the country's economic growth. Vietnam has become a manufacturing powerhouse, signed free trade deals with major economies, and consistently attracted large volumes of foreign direct investment. GDP growth has remained strong, and infrastructure development continues to surge. Despite these accomplishments, the dong's valuation never caught up, until now. With a stronger dong, Vietnam is signaling its arrival as a serious economic force. The revaluation is a financial reset, correcting years of suppressed currency value and aligning it more accurately with Vietnam's rising global standing. Controlled rollout strategy. Interestingly, the rollout didn't happen all at once. There were reports that private banking clients and high-net-worth individuals were the first to be informed, while public interfaces such as ATM balances and consumer banking apps lagged. This phased rollout allowed institutions to control liquidity, prevent panic, and ensure compliance measures were updated before the general public caught on. Banks in the US, UK, and Asia reportedly implemented short-term withdrawal limits. Some froze foreign currency exchanges altogether until internal procedures could be reviewed. Clients trying to convert large amounts of VND faced enhanced security checks, delayed approvals, and appointment-only consultations with wealth advisors. A test case for global currency reset? The bigger picture goes beyond Vietnam. If one nation can successfully revalue its currency without collapsing financial markets, freezing credit systems, or triggering public unrest, could others follow? The Iraqi dinar, Zimbabwean dollar, and Venezuelan bolivar have long been discussed in revaluation circles. Until now, such speculation was seen as fringe. With the dong's successful shift, these theories are gaining traction. Some banks in Africa and the Middle East have already started building flexible currency exchange protocols, which insiders now suspect are groundwork for future similar operations. What should dong holders do now? For those holding Vietnamese dong, caution is key. Here are 5 strategic steps. 1. Verify authenticity. Ensure your notes are genuine, undamaged, and securely stored. Illegitimate or damaged currency may be harder to exchange. 2. Approach financial institutions calmly. Avoid using terms like RV or revaluation. Instead, speak to your bank's foreign currency desk and ask about current exchange procedures for exotic currencies. 3. Watch for communications. Some banks are sending discreet messages labeled Foreign Asset Update or Client Currency Advisory. These may offer opportunities to begin the exchange process. Of course, avoid unregulated exchanges. Don't fall for high-rate offers from unofficial brokers or online forums. Stick with licensed financial institutions and recognized forex platforms. 5. Document everything. Keep records of all correspondence, transactions, and rate confirmations. These could be vital for legal or financial clarity later. Regional and corporate implications. This revaluation will also have ripple effects in Southeast Asia. With a stronger dong, Vietnamese exports could become more expensive, forcing neighboring nations like Laos, Cambodia, and Thailand to reconsider their own currency strategies. Additionally, multinational firms headquartered in Vietnam now face decisions about wage recalculations and pricing strategies for goods and services. Final thoughts. This isn't just a revaluation. It's a historic financial moment that may redefine how countries manage their monetary systems. The Vietnamese dong's sharp climb is both a reward for years of economic resilience and a case study in modern global finance. Whether you're a small-time currency holder or a seasoned investor, one thing is clear: this event has changed the game. Stay informed, stay alert, and, as always, make decisions rooted in facts, not hype.